Hey traders, welcome to Charts and great to see everyone. Happy Wednesday, everybody. Hope everyone is doing well, or at least being really realistic about the positions that you have, managing risk, keeping your head up, and looking for more opportunity. My back in high school, my really good friend and I used to play soccer. And we used to coach the here in the town I live in. We used to coach the 11 and under girls team, which is something we used to do on the weekends. And I remember maybe it was 10 and under. It's been a minute since high school, and I remember telling my friend then. I said, it's kind of tough to get them to pass, and she says you always got to get them to look up. The reason they're tough, the reason they have a hard time passing, is because they're always looking down at their feet. They're always looking at the ball. They're not looking at who might be open. These were kids, but she was right. So as soon as we just got them to, we kind of walk over and just kind of pick their heads up. And then all of a sudden they notice, they know how to pass. These kids are very talented. These kids knew how to handle the ball. They just forgot to look up. And as soon as they started looking up, they found the opportunity. And then fast forward many, many moons later, my husband and I are at motorcycle racing school, and same lesson. Don't ride your front wheel. Look down the track. Look through the turn. And it doesn't matter if it's 11-year-old or 10-year-old girls playing soccer, or my husband and I making our way around the track on a motorcycle. You cannot stare at your feet. You cannot stare at your front wheel and just look at whatever's happening. Now, pick your head up, see what's out there. And sometimes what's out there is there's nowhere to pass. Sometimes what's out there is I need to grab a handful of brake, right? And so whether that's I'm going to do nothing and I understand why, or I'm going to be bearish and I'm going to understand why, or I'm going to be bullish and equally have a rate of change, logical reason for doing so. That's all it takes. Just pick your head up, and that's that's what we've got to do right now. So as always, gang, let's just jump into the questions. There's nothing here that I'm sure at this point you all are not familiar with in terms of what this week is presenting us because of the hot zones, whether it was yesterday's CPI, which, by the way, missed by a mere 0.2. Okay? It missed by a mere 0.2. And what if the connective thread for me, it's not the connective thread for everybody, but the connective thread for me was that the 0.2 miss in the CPI then led traders to make adjustments to what they expected target rate probabilities should or could be. Fed fund futures reacted very hawkishly, not only putting a small but at least noticeable expectation for a full 1% hike into September. The 75 basis points, the 3/4 point hike is firmly priced in, and therefore equities had to sell off. Equities had to sell off with this higher expectation for hawkishness from the Federal Reserve. But it is a sum total of pretty certainly a 0.5 point more in terms of hikes, and then potentially a possibility. I'd say the probability is we're going to be a 0.5 point higher in December than we thought we were going to be all year. That's at 4 to 4.25. And then there's another hike being priced into early next year, February or March. And by the way, if you want a breakdown, and I mean a really thorough breakdown of this, check out the free video yesterday that I posted. It's the one about the CPI back at the Simpler Trading YouTube channel. All right, we have PPI today. Certainly no dramatics with that because, well, bulls still have the birds. What's that cartoon where the birds are going in a circle around the character's head? The bears are maybe tired and they need a break because they were very busy yesterday, sellers. And bulls are wondering what the heck was a license plate of that bus that just hit me. What I'm here to say is the market is going over a very well-worn path. If we were to ask what's new in terms of where we landed yesterday after a pretty significant sell-off, nowhere new, not even lower than where we've been in this month, not even lower, not even a new low for September. All right, now what? And I was just chatting with the Lorna bot Many of you know the Lorna bot. And a lot of what we were discussing is, seasonals, sellers, support. Tomorrow, I was thinking about that today, but it's not my turn to do the free video today. And I want to make sure everybody gets this. Tomorrow, I'm going to do a discussion on seasonals, sellers, and support. And let's see what today, how today responds after yesterday's very dramatic adjustment to what is expected to be a half point more in terms of hikes from the Federal Reserve. All right. So as always, the best part of this show is you all and your questions. And kicking it off, hey there, Nick. What book do I most recommend for learning how to swing trade? For a book? No, none. Here's what I'll tell you, Nick. The books that and I know that somewhere Lorna Bot's going to go no, and Trish, my partner here in the office, is saying no. I would love to do a little show like this, maybe once or twice a month, where we talk about non-trading books for traders, non-trading books for traders. Things like The Tipping Point from Malcolm Gladwell. Anything that has to do with psychology, really sociology, and trends, psychological trends. It could be the trends in clothing. It could be things like that. I think another great one is Moneyball. And you might think, Rob, what does it have to do with swing trading? Swing trading for me is what's the overall trend and what are those regressions to the mean? I don't know that there's a book that really outlines that, although Trend Following by Cavell, I haven't read that one in a while, but it is good. And it's not about swing trading per se. My definition of a swing trade, gang, is not a trade for 3 to 5 days, right? It's definitely not that. It's a swing is synonymous with either being in a trade overnight or it's a retracement in an overall trend. And I don't know of a book that does that. So Nick, I'd have to say probably my next one. But no, I would study trends in psychology, trends in behavior. That's going to give you, I think, a better foundation. I find when I think back on all those books on my shelf, very few of them are trading books. Most of them are just books, business books, just books that I want to read. And they've probably been more impactful. Things like Atul Gawande's Checklist Manifesto has been probably more impactful to me as a trader than most trading books. So probably not a lot of help there. But Nick, check those books out. I think you'll enjoy them. FXE. So let's start off the FXE with the Euro futures, 6E Euro FX. This is overall in a downtrend. Please remember that the 8, 13, 21, 34 are moving lower. That means short the rip into the 34 EMA wave. We had that opportunity from September 9 to yesterday because we were in the wave. And now it seems to be sort of subtle follow through, but not great. Gang, I know the dollar headed higher yesterday. Overall, right? Why? More hawkish central bank means what? Stronger currency. Doesn't matter what the central bank is. It generally means a stronger currency because the US dollar index is a measurement of the US dollar versus the euro, yen, and pound in that order. And from a weighted standpoint, if the euro, yen, and pound are weaker than the dollar, that keeps the US dollar propped up, not just the US central bank action alone. Notice the US dollar is coming down. That's going to be a little bit of a relaxation of that hawkish conversation. And then that should mean also that ZB and ZN are at least leveling off at this Darvis level support. So the panic from yesterday, at least for now, and we'll see what happens after the bell into the end of the clearing range, at least for now, whatever that was has been discounted, right? I would stick to the short side on FXE, Jose, but without a lot of expectation for a ton of follow through. Because remember, the European Central Bank is raising rates. All right, editor, how are you? Haven't seen you in a bit. Good to see you. Do you think Apple is at the right place to purchase shares for the long term or wait until the next Powell announcement? Of course, that's 21 September on the rate hike. Your webcast last night from Simpler was so helpful. Thank you very much. I got a little personal in that video. because I realized where, the button that gets pushed when I see the fear mongering and the crash calling and just the general pessimism is, I'll tell you what, I've had the great pleasure of befriending and knowing a lot of traders and a lot of business people who have done exceedingly well in life. Uh, and I'm just talking business wise, business success, even friends, family, uh, money, right? They're all optimists. I don't know any rich pessimists. I don't. Um, I know a lot of broke pessimists. I know a lot of angry pessimists, but I don't know any rich ones. And being bearish is not the same thing as being a pessimist, but the continual calling for collapses and crashes and whatever other kind of calamity, makes people sound smart. At least I think they think that. But it isn't what maps to a happy and productive and profitable trading or life. So thank you. And I hope I touched on that. And like I said, I'll be a little bit more tactical in Thursday's video when we follow up on that and say, okay, Rog, now what? I really wanted to see if we get an inside candle or a pause day, and that's going to extend to Apple. Editor, that's going to extend to Apple. A candle sort of on par, as we would expect. Indices sell off, XLK sells off. Apple's got to go out with that tide. I'd like to see an inside candle or a minor low. And then if the support at this Darvis level is going to hold on the daily, that bodes pretty well. When you mention longer term, for me, that starts to invite the conversation about the weekly chart. Now, the weekly chart's the one here on the right. Take a look. That weekly chart's sitting at some pretty important VWAP support. And let me just kind of give you a little bit cleaner a look at this chart. There we go. There we go. And look, I'm not going to really panic. I don't like to panic at all. Panic is not ever going to serve us, right? I'm not really going to be a little bit more concerned about further follow through to the downside unless we break 150. There's very little reason to be bearish between 155 and 150. This is the weekly chart. So the simple answer is, I would like to see where do I not have my propulsion on there? Well, I'd like to see where propulsion sits. So you know what, editor, throw a 200 on there. Throw a 200 exponential, right? Or if you even want to get a little bit more, say, sort of old school about it, you can throw, say, a 2050, 100, 200. That's sort of the useful but very pedestrian way of looking at the market. Now, I say pedestrian not to be sort of insulting, but I say it in the way that I mean, which is it's just common. And what's common is often reacted to. I think it's a little bit of a mess when you look through that view. So I think you get a lot more clarity from the volume weighted average price, not from an exponential or even simple moving average, as much as you will that volume. So I really like that. And the bot's telling me it's well above the 200 on the weekly and daily. So yeah, I'd keep an eye on 155 to 150. And volume of the volume ledge is kind of right there, is giving me a really, really solid spot for where opinion and size is. Let me check one more thing. So I'm sure you're not the only one wondering about Apple. Some support levels that I have in mind. Wow. Okay. Yeah. 156.5 to 153.80. Got some little Raghee numbers here, which are usually volume derived, 156.5 to 153.80. All right. Thank you for the question. And by the way, I'm using the Trading View charts today. All right. Next up is Janet. Good morning. I just finished watching my video from last night. Cool. Can I review the chart I referenced? The graph, we talked about a lot. You talking about the one from the CME, Janet? Just guessing. We had a lot of charts in that video. Let me know which one you're talking about, Janet. And hey, bot, could you keep an eye out for Janet's reply, and I'll circle back. Let me know what you were looking for, and I'll be more happy to circle back. All right. Last week we debated SP. We debated. Oh, did we debate? Hey there, Victor. SPY. It was my favorite class in college. SPY retracing to the 390 area. Again, I don't use Elliott wave. So I think I remember your question now. I think I just basically said, ask Mr. David Starr. That's definitely his area of expertise. And that's probably what I mentioned. So that's cool. It could send us to 420. Victor, and I'm not going to say I love it because I'm bullish. I'm more in favor of looking to set up longs with a longer term time horizon, whether that be in my longer term portfolio, which is a conversation my Sector Secrets Mastery folks, the replay is in the members area. Check that out. Shows you the buys that I'm looking for with that longer term time horizon. And then the expectation for movement higher. I'm not going to say that we're in a trend on the SPY or on the ES. And while I'm sure there are all sorts of headlines and all sorts of narratives that traders, I got a really good idea yesterday when looking at the comments, which are very telling. They were very interesting comments. And I appreciate everybody. The videos aren't there for you all to agree with me by no means. It's interesting to see everyone's take because, it helps me too. So I don't live in this echo chamber in my head. But I look at this chart. I'm going to go back to what you always hear me talk about. The trend that preceded the chop was bullish. Respect the trend that was. We're not putting in new lows. We're not in a downtrend. So I'm going to look at oversold buys. That's the focus here. So I'm not in any way disagreeing. And I would love to think that my trend analysis and your wave analysis are definitely in sync, Victor. So thanks for the share. IEF, is it oversold? Marla, if I'm looking at IEF, I'm going to look at ZN. And if I'm looking at ZN, it is in a downtrend. So for me, there's no application of oversold in a trend. There's no way I can start to say because really what that means is I'm going to pick a bottom in a trend. And for me, is it oversold? I can't even begin that conversation until we go back to a neutral market. We get to a neutral market. So I hope that makes sense. No, I don't believe, I wouldn't look at it that way. Again, that's something I can't do in a trend. Thank you for the question, Marla. Hey there, Alex. The market is a spoiled child. Isn't it always? Isn't it always? When it doesn't get what it wants, it throws a hissy fit. What's a trader to do but play the chart in front of them? Absolutely. We trade the market we have. Always. We trade the market we see. Absolutely. Absolutely. All right. Thinking Fast and Slow by the Horns. Excellent book. Yes. Charles Duhigg. Good stuff. Yes, absolutely. I'm a huge Malcolm Gladwell fan. Hey there, Yee. How are you? They're easy to read. I know some people may or may not agree with him. I try not to confuse authors with what they write. I know Malcolm Gladwell got into some, I don't know, he said something and everyone kind of lost their minds about it. But I like his writing generally. Outliers, The Tipping Point, Blink. Oh, Blink's another really good one. Blink. Yeah, I like it. Just gets you thinking. It just gets you thinking, right? I don't agree with everything they say, but it does get you thinking. And I do like his books. Yeah, I'm with you. Let's see. Next up is do I believe? So what I trade what I see. So what that I'm just gonna go with the S&P. Alino, just kind of a broad look at the market. I'm assuming that's what you're asking. Have equities been in a downtrend since January this year? So again, I don't believe in defining a trend by trend lines. I don't use them at all. I look at trends by really in two ways: volume weighted average price and the 8, 13, 21, and 34 EMAs. I think we've been in a lot of chop. We've had moments of organized downtrends on the daily time frame. We've had a lot of chop. We've had brief moments of some organized uptrends, but mostly I'd say chop. Mostly I would just say chop. Now, if we're going to look at it from the standpoint of Raghee, we lower now than we were in January, and would that then justify a downtrend? I think we're lower now than in January. I wouldn't call it a downtrend, but clearly we're lower. right? And that might be splitting hairs, but I won't call what we're in now a trend. But if I look at January 1 to September 14, yes, clearly we're lower now than we were then. And if that is enough for a trend, or if that's going to be a definition, then I don't think it's wrong. All right, Lisa, you have any great book? Oh, you have any? Oh, yeah, A Mind for Numbers, and I can see it from here. It's one of my absolute favorites. Barbara Oakley, yes, big fan. I'm a big fan of a lot of what she writes. Yeah, Barbara Oakley, really good stuff. How did I learn all of my technical expertise? Abe, there weren't a lot of, when I was learning how to do this, it wasn't like we have now. There was no Simpler. There was no internet. There was Walden books at the mall. And eventually we started getting Borders. You remember Borders? And Barnes and Noble and the library. When I was trading in college, I had access to TASC, Technical Analysis of Stocks and Commodities. My college library had the old issues. So it was a lot of older books that I read. Dow, Wyckoff. I mean, a lot of older books. Loeb. And just being in the market. What's that saying? On the job training, being in the market, studying charts probably taught me more than any book, just being in the market. I think books are very helpful, but then you have to, it's the difference between information and application, right? And a lot of traders, being a practitioner means we got to be in the market. So I think just being a practitioner, and hopefully the 30 years of good things I've done and epically stupid things that I've done, I hope I bring to the table so you can benefit from the good and you can avoid the galactically stupid things that I've clearly done in the past, which is what led me to the tools that I've created and the risk management process that I follow. What was the answer before we wrap up here? What was the answer on the chart? I don't think I see it. Oh, the Fed Watch tool. There it is. Okay. I don't know what stone I left unturned in the Fed Watch tool. You wanted to see hang on, let me scroll back up to that question. Bear with me. Just finished it. Can you review? I would just watch the video again, Janet, to be quite frank. I mean, I went into, that was a 16-minute free video. So if you have a specific question, I'm more than happy to answer it. I'll be here tomorrow too. But generally, here's what I would recommend. Take a look at December. I'm not really concerned about September, really. I mean, whether we get 3/4 of a point or a full basis point, if the full basis point column for September continues to rise, look for the markets to sell off. This morning, the 3/4 of a point column is taller. So if you're wondering, could equities sort of be relaxing a little bit, just kind of calming down? Yes. Unless that 3.25 to 350 column starts to move higher, probably no reason to be really near term too bearish. And unless the column for, say, 4.25 to 450 starts turning into 450 and 4.75, or same thing with February, unless we start to move to taller columns on the right, unless that happens, what we know, and the worst of it, is priced in. PPI didn't do much. And so that means that the next time we really need to take a look at this will be Tuesday, Wednesday, as we go into the Federal Reserve. Okay. But I would definitely watch that video again. I know I threw a lot at you all, but I hope that gives you an idea. Really simply, Janet, if the columns to the right of wherever we are right now start to get taller, look for equity weakness. And if they stay where they are, move to the left, taller columns, look for equity strength, because one side is more hawkishness, the other side is less hawkishness from where we are most discounted right now. All right, gang. Thanks as always for being here for Charts and Coffee. We'll be right back at 9 a.m. tomorrow. And in the meanwhile, be good to each other, gang. I'll talk with you soon.